Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover all the relevant and important finance current affairs and the RBI notifications which are important from your exam point of view. And in today's session, I have brought for you two very important news articles that are important from your exam point of view. The first one is regarding the Monetary Policy Committee meeting that has happened in April 2024. So that we will discuss that what is this meeting that has happened. And the second news article, this is more relevant from your understanding perspective, from your knowledge perspective, that okay, another website has been launched, a new website has been launched. So what this new website is providing. So we will discuss all about this new website. Okay, so let's start with the session. But before that, do subscribe to the YouTube channel and join the Telegram channel for the PDF of the session. Okay, so in the Telegram channel of EduTap, you will get the PDF of the session and the link for the Telegram channel is provided in the description box below. So let's start with the first news article, that is regarding the Monetary Policy Committee meeting that was held from 3rd to 5th of April 2024. So I hope you remember that there is the bi-monthly Monetary Policy Committee meeting that is happening. It happened last on February. Now for this new financial year, the meeting that has happened on 3rd to 5th April 2024. Now this is the first bi-monthly Monetary Policy Committee meeting that has happened for this new financial year that has started for the financial year, that is the financial year 2024-25. So what decisions the RBI has taken? So starting with that, MPC at its meeting decided to keep the policy repo rate under the liquidity adjustment facility unchanged at 6.50%. So that is on the basis of the evolving macroeconomic situation, the current and the evolving macroeconomic situation, the Reserve Bank of India, the Monetary Policy Committee has decided that we are going to keep the repo rate, that is the policy rate of the Monetary Policy Committee, unchanged at 6.50%. Okay, so repo rate is kept unchanged but at a higher level. As well as there is the decision that has been taken, the MPC has decided to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the target. The target is 4%, the range is plus minus 2%. That is, the inflation should not go below 2%, that is the lower tolerance limit, and the inflation should not go above 6%, that is the upper tolerance limit. Okay, so that is the inflation progressively aligns to the target, that is 4%. There is the decision that has been taken by the Monetary Policy Committee to be focused on withdrawal of accommodation. Withdrawal of accommodation means what? Withdrawal of accommodation means that in the coming period, the RBI is thinking of increasing the repo rate or keeping the repo rate unchanged, but there is no such decision that is going to come in the future of decreasing the repo rate. The RBI is not thinking of decreasing the repo rate in the coming period. So if the RBI would have decreased the repo rate, what would have happened? So decreasing the repo rate means the banks can take the loans from the Reserve Bank of India at a cheaper rate, at a lesser repo rate. So the banks will give the loans to the customers at a lesser rate. So there will be money supply that will increase in the economy. The people will have more money to spend, so the demand will increase in the economy, and with the increase in the demand, the price will start increasing in the economy. So this is the scenario that the inflation can come in the economy. The price can further start rising in the economy more rapidly if there is the decrease in the repo rate that is done to boost the demand. So right now that is not the requirement. Right now we have to be focused on the withdrawal of accommodation, that is either we have to keep the repo rate constant at the high percentage or we have to increase the repo rate in the coming period so that we can align to our inflation target. So right now the focus is given to the inflation, controlling the inflation rather than focusing on increasing the demand. Okay, so that's why the RBI is saying that we are focused on withdrawal of accommodation. Okay, as the path of disinflation. Disinflation means the inflation, it was rising from, let's say, 4% to 6% to 7%, 8%. So this is the increase in the inflation rate. Disinflation means that we have to decrease this inflation rate, okay, from say 8% to 7% to 6% to 4%. So that is disinflation, that we have to decrease the rate of inflation, okay. The inflation should be positive, because at least the lower tolerance limit is what? Lower tolerance limit is 2%. 2% is the lower tolerance limit, that this much of the inflation is required in the economy for the activities to sustain, for the production to sustain in the economy, this 2% of the inflation is required in the economy. So at least this much of the inflation should be in the economy. So there should be positive inflation, but the rate of inflation should be decreasing from the high rates to come to the target, that is 4%. So that is the idea, that as the path of disinflation needs to be sustained, we still have to root disinflation in our country. We still have to decrease the rate of inflation in our country till inflation reaches the 4% target, because this is the target that we have to meet. This is the target that MPC, Monetary Policy Committee, has to meet. This is the target of inflation. On a durable basis, it should not happen that, okay, today we have met the target, that's it. Tomorrow it is going to 8% or next month it is going to 9%. We don't care because we have met the target on some particular day. No, we have to meet this target on a durable basis, that this is the target that sustains, or this is the target inflation that only keeps in the economy, and the inflation should not go above than this target. The MPC decided to keep the policy. So seeing this, that disinflation is still required, we still have to decrease the rate of inflation to meet the target, that is 4% on a durable basis. The MPC has decided to keep the policy repo rate unchanged at 6.50%. That is the high percentage of repo rate and I hope everyone knows that repo rate is the rate at which the banks are taking the loan from the Reserve Bank of India, and the banks have to give collateral in the form of government securities to the Reserve Bank of India, okay, and when the loan is returned, it is returned with the repo rate, that is the kind of interest rate that the customers have to give to the bank. So same is the repo rate, that is the interest rate that the banks have to give to the RBI for taking the loans by the bank, okay. So this is the idea, this is the repo rate. If the repo rate is kept at high percentage, then the interest rate will also be kept at a high percentage or at a good percentage, so that the banks are giving the loans to the customers at a sustained percentage, at a high interest rate, so that the customers are not taking too much of the loans and there is not too much of the money supply that is increasing in the economy, because too much money in the hands of people can lead to too much of the demand that can further push the inflation higher, okay. So this is the idea. Now coming to the next point that has been said by the Monetary Policy Committee. So the next point is that the monetary policy must continue to be actively disinflationary. We have to actively lead to the disinflation in our economy, so that the inflation rate can decrease in the economy, to ensure anchoring of inflation expectations also. Because if you think that, okay, in the next month the prices are going to increase, in the next month the prices are going to increase, so what you will do, you will start your consumption right now, you will boost, like you will increase your consumption right now. So you think that, okay, next month the electronic goods prices are going to increase, so what you will do, you will start buying the electronic product right now. So you think that the electronic products are going to become from rupees 100 to rupees 200. In the next month the prices of the electronic goods are going to rise, so you will not wait for the next month, you will start buying more of the electronics products or more of the products right now, so that you can store it, like it happened with rice or wheat, that in US they had the rice scarcity, or they were expecting that the prices of rice is going to increase, so they started hoarding up the rice in their houses. So that kind of thing can happen, and suddenly the demand can increase very high in the economy, because you are expecting that in the future the prices can rise, so you will start demanding more of the products right now, okay, you will start demanding rice and wheat right now. So the price, if the demand increases, the price will actually increase, because you have increased, because the people in the economy has increased their demands, due to that the prices will increase. So inflation expectations have to be anchored, that it has to be shown to the people that RBI is doing everything and anything to control the inflation, so inflation is not going to rise in the future and inflation is going to actually decrease in the future, so that the people that are hoarding their material, they start supplying their material in the market, and the supply chain can be should not be disrupted, okay. So there should be fuller transmission also of the repo rate increase that the RBI has done. So in the 2022, the RBI was increasing, like till Feb 2023, the RBI was increasing the repo rate, right? Till Feb 2023, the RBI was increasing the repo rate, and this was done so that the inflation can be controlled, the demand can be controlled. So for fuller transmission of this increase in the repo rate, so that the demand is controlled as well as the inflation is controlled in the economy, this fuller transmission can happen if we are anchoring the expectations of the inflation as well as we are also working actively on the disinflation. Okay, so this is the idea. Now coming to the next point, the MPC will remain resolute in its commitment to align the inflation to the target. So the idea is that we have to meet the target. It's not like that, okay, we are near 6%, we are 5.9%, we are saying that, okay, we are within the target. So what do? We don't need to worry. So 4% plus minus 2%. So that means inflation, the upper tolerance level is 6% and the lower tolerance level is 2%. So even if the inflation is near 6%, or it is like 5.9%, 5.8%, then also the RBI is within the target, the Monetary Policy Committee is within the target. But it should not happen that the RBI is becoming relaxed that, okay, we are within the target, so we do not care now whatever happens. If the inflation is rising, it is within the target, so let it be at 5.9 or 5.8. No, the target is 4%. So RBI and the MPC should be working to bring the inflation to near to this target, 4.1, 4.2%, that is the good percent. So the MPC is committed to align the inflation to the target, okay, to 4%. The MPC believes that durable price stability would set, so durable price stability would set strong foundation for a period of high growth because the people's expectations would be controlled, would be anchored to a lower inflation, so the people and the supply chain will not be disrupted, the supply chain will happen smoothly, as well as the price stability will lay the foundation for a strong economic growth in the coming period. Because in a country, if there is very high inflation, or if a country is always worried about their inflation, they will not be able to focus on the growth. So if we have to focus on the growth, we have to first bring the inflation to the target so that it is staying there. Okay. Next is the MPC also decided to remain focused on the withdrawal of accommodation to ensure that inflation progressively aligns its target. Okay. So it is said that in the future also we are not going to decrease the repo rate for now. So for now, withdrawal of accommodation is there, so that we are trying to control the inflation and we are trying to bring it to the 4% target. Any confusion till now? Okay, so it is RBI NewsTap. Adya, it is RBI NewsTap, where you can find all of these news articles, and it is present in the current affairs section. Okay, so now coming to the policy rates. This is how the new website provides you the rates. So in the older website, there were the rates that were given in the home page on the right hand side, but in the new website, these are how the rates are being shown. And why this is better? Have you seen this new website? Here it is shown that in the past 1 year, what is the change that has come in the policy repo rate. So from May 2023 till April 2024, there is no change that has come. There is no change that has come in the policy repo rate, that has been kept 6.5%. So this is the idea, that here you can see the policy rates. If you go to the home page of the new website, you can see the policy rates, as well as you can see that, okay, what is the change that has been brought in these rates in the past 1 year. Okay, so the fluctuation will be shown also. So this is more analytical. The new website, it is showing more analytical idea. Okay, so policy repo rate is kept at 6.5%. Now I hope you know that the SDF is less. The SDF, standing deposit facility, that is the deposit facility of the Reserve Bank of India. So standing deposit facility, it is less than the repo rate by 0.25%, and the MSF, that is the lending facility of the Reserve Bank of India in the emergency kind of situation. So this is higher than the repo rate by 0.25%, by 0.25%. So that is, if the repo rate is 6.5%, SDF is 6.25% and the MSF is 6.75%. Withdrawal of accommodation means that the RBI is not going to increase the repo rate in the future, is not going to decrease the repo rate in the future, because the withdrawal of accommodation means that we are actively looking forward to control the inflation in our country. So we are not going to decrease the repo rate in the near future. Withdrawal of accommodation means that we can increase the repo rate or we can keep the repo rate constant in the coming periods. But we are not even thinking about the decreasing the repo rate, because this will increase the demand, this will increase the inflation in the economy, and right now we are more focused on the inflation, controlling the inflation. So we are doing the withdrawal of accommodation. That means it is giving the idea to the businessman that okay, in the future the repo rate is not going to decrease. That means interest rate in the economy is not going to decrease, because the interest rate are related to the repo rate in a way. So if the RBI is not decreasing the repo rate, that means the banks will be getting the loans from the RBI at a higher rate. So they will be giving the loans to the customers also at a higher rate. So withdrawal of accommodation means that the RBI is not thinking of decreasing the repo rate. RBI is thinking of either increasing the, RBI can increase the repo rate as per the situation. RBI can increase the repo rate in the future, or RBI in the near future, or RBI can keep the repo rate constant in the near future, as RBI is doing right now. Okay, so that is withdrawal of accommodation. RBI is not thinking of accommodating, is not thinking of reducing the repo rate in the near future. So if the repo rate is 6.5%, the standing deposit facility is 6.25%, that is less than the repo rate by 0.25%. MSF rate is 6.75%, that is higher than the repo rate by 0.25%. Bank rate is equal to the MSF rate. Okay, so this is the whole idea. Now these decisions are in consonance with the objective of achieving the medium term target for CPI inflation, the consumer price index inflation of 4%. So the inflation rate is 4% plus minus 2%, and we have to meet the target. Now domestic economy. So what is the condition of the domestic economy? Now is it clear, Pratul, that what is the meaning of withdrawal of accommodation? Clear? Or is there still any confusion? Okay, now coming to the domestic economy. So domestic economy is experiencing strong momentum. There is the demand that is increasing in our economy because of the urban demand and the rural demand. So as per the second advanced estimates that is given by the NSO, National Statistical Office, the real gross domestic product, expanded at 7.6% in 2023-24 on the back of buoyant domestic demand, on the back of good domestic demand. So that you can understand that the GDP, the real GDP, it is projected that the real GDP has expanded by 7.6% in the 2023-24. Okay, so that is a good percentage. On the supply side, the gross value added that is seen from the supply side, it recorded a growth of 6.9% in 2023-24, that was driven by the manufacturing and the construction activity in the country. Looking ahead, an expected normal southwest monsoon should support the agricultural activity also, as well as manufacturing is expected to maintain its momentum on the back of sustained profitability. So manufacturing is expected to grow in the coming period also because of the sustained profitability. Service sector is also likely to grow above the pre-pandemic trend. So it is even going to go above the pre-pandemic trend. Okay. So private consumption should gain steam with the further pickup in the rural activity. So until now the urban demand was quite high, the discretionary demand was quite high, but now it is said that okay, the rural demand or the rural activities is also going to pick up. So the private consumption from the rural area is also going to pick up. Steady urban demand has remained steady, it has remained continuous. Okay, the prospect of fixed investment remained bright with the business optimism. So now there is more expectation of the sustained profitability. So the investors, they are doing more investment in the fixed capital. Okay, and healthy corporate and the bank balance sheet, robust government capital expenditure that the government is doing for the roads, for the schools, the capital expenditure that the government is doing, signs of upturn in the private capital expenditure cycle. So there is, until now the government was the one that was leading the investment in the country by boosting the investment in the country, but now it is expected that the private capital expectation, because of the sustained profitability and the expectations of the profitability in the near future, it is expected that the private capital expenditure is going to increase, the investment by the private sector is going to increase further. Headwinds. Now the negative thing is what? That geopolitical scenario is still tensed. There is the headwinds from the geopolitical tensions, volatility in international financial markets is there, as well as geo-economic fragmentation is happening. The countries are dividing in between different groups. So this rising Red Sea disruptions as well as extreme weather events, however, pose risk to the outlook. So that's why there are the positive things that are going on in our country, but because of the external circumstances, there can be the disruptions that can come, and that's why taking all these factors into consideration, the Monetary Policy Committee has projected the real GDP to grow for 2024-25 at 7%. At 7%, it is expected that the real GDP will grow. Okay. SDF I will explain at the end of the session. Okay. Let's continue with this. So headline inflation. Headline inflation means the retail inflation or the CPI inflation. CPI inflation is the inflation that affect the consumers. So consumer price index inflation means this is the inflation that is affecting the consumers, and this is the inflation that RBI, the Monetary Policy Committee, has to control. Now the headline inflation softened to 5.1% during January-February 2024 from 5.7% in December. That was near to the 6% mark. So the headline inflation, the retail inflation has softened, but the main problem that is coming from the food inflation. Okay. So after correcting in January the food inflation was lower, but in February the food inflation edged up to 7.8% in February. So that is a huge percentage. The food inflation is rising very fast in our country, driven by vegetables, eggs, meat and fish. But the good thing is that at least the fuel prices remained in deflation. Fuel prices is actually decreasing. So remember one thing, that there is a difference between deflation and disinflation. Disinflation means that the inflation rate is decreasing from 8% to 6% to 4%. So that is disinflation, when the inflation rate is positive but it is decreasing. Deflation means that there is negative inflation when the price level has started to decrease. So there is negative inflation. Okay, there is negative inflation. So disinflation means that the price level is increasing. But at a lower percentage. Clear? Is it clear? Disinflation means that the inflation rate is positive but it is decreasing. So the price level is increasing but at a lower rate as compared to before. Deflation means that the price level has started to decrease. There is a negative inflation that is coming into the economy, or the price level is decreasing very much in the economy. So for the fuel prices, they remained in deflation. That means the fuel prices have started to decrease for the 6th consecutive month in February. So that is good for our country, because of the fuel prices are decreasing. It will benefit all the sectors in our country, because the fuel is required in all the sectors. CPI core, that is the consumer price index excluding the food and fuel sector. Disinflation took it down to 3.4% in February. So disinflation means that the inflation rate is decreasing. So you can see that the inflation is present of 3.4%, but that is a very less percentage. 3.4% is even below 4%. So CPI core means the CPI inflation excluding the volatile sectors such as the food and fuel. So if we are excluding food and fuel, we have the manufacturing sector, construction sector and such. So this CPI core disinflation is there, that took it down to 3.4%. So because of the fuel inflation that is decreasing, or the fuel prices that is decreasing, that means the deflation that is coming, and the disinflation that is coming in the CPI core in the manufacturing and such activities, you can see that the inflation actually decreased from 5.7% to 5.1%. But actually the fuel prices are the main problem here now. SDF I will explain by the end of the session. Okay. Otherwise, it will break the flow of the session now. Okay. So this is it, that the CPI core is good. Fuel prices are decreasing, so that is good. But the food inflation is the main problem. The increasing incidence of climate shock. So in this Monetary Policy Committee, there is too much emphasis that is given to the climate shock. That climate shock are coming, climate problems are coming, the incidence of the climate shock has increased. So that's why also this Monetary Policy Committee statement becomes important, because here the specific importance is being given to the climate shocks. So the increasing incidence of climate shocks remains a key upside risk to the food prices, because the monsoon can be affected by the climate risk, or there can be the heat or normal temperature that is increasing, due to which the crops are not able to survive. So climate risks are a big risk on the food prices. Low reservoir levels, so the water levels are decreasing, especially in the southern states. and outlook of above normal temperatures. So outlook of above normal temperatures during the April-June also pose concern. So what is happening that in the southern states of our country, what is happening that the reservoir levels are decreasing. Okay, there is the low reservoir levels in the southern states of our country, especially and the outlook of above normal temperature. The normal temperature, it is also rising, and there is the outlook, it is the expectation that in the future, in the coming months, the normal temperature is going to increase and it is going to be above the normal temperature. The temperature is going to be above the normal temperature, so that is going to be posing the risk on that will be posing the concern on the crop. Tight demand supply conditions in certain pulses and the prices of key vegetables need close monitoring. So this is the whole scenario that the climate shocks are coming. That is a risk for the food prices, as well as low reservoir levels, as well as the above normal temperature, that remains concern for the food inflation. Taking into account all these factors and assuming a normal monsoon for now, CPI inflation for 2024-25 is projected at 4.5%. So this is the projection that has been given. Okay. Next, CPI inflation. I have told you that this is the consumer price index inflation. This is the consumer price index inflation. Yes, LPG prices decreased. CPI inflation. So this is the CPI inflation, consumer price index inflation, that you can see that the CPI inflation, it is calculated. The index consumer price index includes the consumer goods that the consumer use, such as the food and beverages, pan, tobacco, intoxicants, clothing and footwear, housing, fuel and light, and miscellaneous. So these are the goods that these are the goods that the consumers use, and in this the weightage is given highest to the food and beverages, because highest food and beverages is being used by the people, so the highest weightage is given in the index to the food and beverages and such. Okay, so NSO releases the CPI inflation for the combined for the whole of the country. Okay, so next is the MPC has noted that domestic economic activity remains resilient, backed by the strong investment demand and upbeat business and consumer sentiments. Okay, so the consumers sentiments are good. The consumers in our country are optimistic, as well as the businessmen in our country are optimistic, and that's why the economic activities are working efficiently in our country. The headline inflation has come off the December peak. So headline inflation in the December, it was 5.7%, so that has come down to 5.1%. Food price pressures have been interrupting the ongoing disinflation process. So food inflation, you have seen that how high it was, posing challenges for the final descent of inflation to the target. Next is unpredictable supply side shocks from adverse climate events. So again, the adverse climate events have been talked about by the MPC, that unpredictable supply side shocks, that maybe the temperature increases and the crops fail, or the reservoir levels further decrease and the crop fails. So supply side shocks are unpredictable from the adverse climate events and their impact on the agricultural production, as also geopolitical tensions and the spillovers to trade and commodity markets. These add uncertainty to the outlook. So the climate events as well as the geopolitical scenarios, they are adding to the uncertainty in regards to the outlook. But still, if we see for our country, it is the domestic demand and the business sentiments, the consumer sentiments, they are keeping the country afloat. Okay, and yes, the fuel is the LPG here, because we are talking about the households now. Next is launch of RBI's new website and mobile application. So this is the older website of the Reserve Bank of India. If you see that this was the interface before, I used to like this also, because everything was available here, about us, notification, press releases, and everything was available here. And then this was the home page that showed what's new, as well as here the rates were given, the policy rates, the reserve rates and such. Now coming to the new website, this is the new website of the Reserve Bank of India, which is also very good. And the interface has become more interactive, I can say, as well as there is more understanding and knowledge and analytical parts that have been provided. Okay, so before, if you went to the policy rates, there were only rates that were shown. But now, as I have shown you, there is also the that how they have changed in the past 1 year, that is also being told. Vikrant, Saturday, Sunday was off for the team now, so it should have been uploaded by yesterday. I will check. Okay. By Monday it should have been uploaded, but I will check. According the team should have uploaded it by 12 in the Monday. Okay. So this is the new website where, see, there are many of the pictures that have been shown also to show that what new thing the Reserve Bank of India has done, or the Monetary Policy Committee meeting has happened, the 90 year ceremony that the RBI is undertaking, and various new things that the RBI is doing, that is actually shown through the pictures. Then if you come here, what's new? So at the above, about us, notification, press releases, speeches and all is shown, as well as at the beneath this there is what's new, that is the column that you used to get in the home page here, but that you are now important updates you are getting below. Okay, then you can see that the current rates are also shown here, so you can go to the current rates and see that what is the current rates, as well as what is the trend of the current rates, that also you can see. Previous website was user friendly, I can say, but the new website, it is more analytical, as well as it is providing you with more pictures to understand that what is going on, what are the new scenarios and what are the new situations that have been led. Okay. Yes, it is important. It is very important to check the website. That's why I have brought this. This is nothing like it will come in your examination or something, but at least you should go and visit this website, try to understand this website, because the notifications, press releases, they come in the examination. Okay, and you must know about the RBI also, what are the current rates, what is the trend of the current rates. Okay, so this all you have to see, what new is going on with the Reserve Bank of India, that you have to see, especially if you are preparing for RBI Grade B. Now this is also a mobile application that has been launched by the Reserve Bank of India. So the new mobile application of the Reserve Bank of India, you can download it in the iOS, in the Android also. So I tried to download it in my Android mobile. So this is the, if you go to the Play Store, you can search the Reserve Bank of India app, and this is the official app of the Reserve Bank of India. Okay, so the app has also been launched. So this is it for today. I hope you have understood everything fairly easily. This is the first question. I hope you will be able to answer this question. This is the first question. I hope you will be able to answer this question. Try to read it and answer it. And this is the second question. Here the important percentages are mentioned so that you can get what is wrong here and you can remember the percentages. Okay, so try to answer this and tell me in each and every line that what percentage is wrong, and other than 7.2 percentage, what should be the percentage, other than 5.5 percentage, what should be the percentage, so that it can be seen that okay, you remember it or not. Okay, so this is it. Thank you very much. I hope everything is clear for you, and this is it from my side. If you have any query, you can comment down below. If you have any query, you can comment down below and do give the right answer of the homework question and do tell me that what are the actual percentages. Okay, thank you very much everyone. Have a good day. Any query? Okay, someone was asking about the SDF, importance of SDF. Okay, SDF is the standing deposit facility. The banks, if they have excess of money, they can deposit their money with the Reserve Bank of India. They can deposit their money with the Reserve Bank of India, and the RBI do not have to give, any collateral to the banks. Okay, before under the reverse repo rate, the banks were depositing their money with the RBI, and the RBI had to give the collateral to the banks in the form of government securities. Now the RBI do not have unlimited of the government securities, so RBI came forward with this idea of SDF in April 2022. As much as I remember that in April 2022, in the Monetary Policy Committee meeting, there was the SDF that was launched, and in this now the RBI can deposit the money of the banks without giving any collateral to the banks. And remember that the SDF rate is connected with the repo rate. So SDF is less than the repo rate by 0.25%, and you can see that SDF is 6.25%, while fixed reverse repo rate is 3.35%. So you will not want to deposit your money. You will not want to deposit your money under the reverse repo rate. You will want to deposit your money under the SDF because SDF is higher. Okay, and in this SDF, the Reserve Bank of India do not have to give. Okay, under the SDF, the Reserve Bank of India is taking the deposits of the banks, but RBI do not have to give any collateral, any government security. So that's why SDF is better. SEBI के लिए MPC is only required, not the website of RBI. You can read the website of SEBI during the interview round, especially. Okay. So thank you very much, everyone.